Hi everyone, welcome to today's video. So on today's video, I am going to talk about the HDFC Bank and HDFC Group stocks. I had made a video a couple of months back where I told you very categorically that I've invested a lot of money in HDFC Group companies. I also explained the rationale, and today is the day when these stocks have given a breakout. As I'm making this video during the market hours, this is the screenshot that I'm putting up. This is the profit that I'm seeing on some of my stocks. So roughly my HDFC portfolio has roughly given me around 20% return. So this is like a big gain on a sensible stock like HDFC. So on today's video, I'm going to cover whether you should be buying more HDFC group stocks. Number 2, why the stocks have given run up. 3, if you are already a buyer in these stocks, should you be booking partial profits and getting out? And more importantly, are there any more opportunities in the market? And what is the most promising opportunity that I see right now? So this is the complete analysis that I will do. So please watch the video till the very end. First and foremost, why have the HDFC group stocks given a lot of run up today? The answer, if you go around, ask people or watch a lot of YouTube videos, people will say that, hey, there is some like mergers and acquisitions news that is floating around, that HDFC Group is going to get merged with HDFC Bank. Interestingly, HDFC Bank is the subsidiary of the HDFC Group. But here the subsidiary or the HDFC Bank has become so big, such massive brand value, that we have gotten to a point now where HDFC Bank, which is the parent company, is being merged with the HDFC Bank. So people are telling us that, okay, it's because of this merger news that the stocks have become a rocket, and it is literally going to be a game changer in the economy. Now, I have studied these things formally on how mergers and acquisitions work. In consulting, I have worked on M&A, mergers and acquisitions project, and I can tell you that it does not change the company fundamentally. So let me give you a very quick theory around it so that you understand these points also. In case you're not interested in learning this MBA stuff, you can move on to the next section. So very quick theory here is that you have mergers and you have acquisition. So merger means that there is an entity A. For example, A could be HDFC Bank. Then there is a separate entity B, which is HDFC. Now both these companies merge together. They work under this new unit, whatever the name here could be, right? So under the current scenario, the way the structure of HDFC with HDFC Bank is being merged, this entity will be called as HDFC Bank only, as far as I have read. So this is point number 1. Point number 2 is, what is acquisition? You must have heard about a term called as acquisition also, that Facebook went and acquired Instagram. So here what happens is that A is Facebook, B is Instagram. It is very small in size. So it definitely works under brand A, which is Facebook. So this is the difference between mergers and acquisition from a theory point of view. Now, an obvious question here would be that, okay, why is it that these mergers acquisitions take place? Is there any sense to it? So here's a quick chart for you. You can take a look that these are the primary advantages of mergers and acquisition. And if you think about it by using the example of HDFC Bank and HDFC Group, what you would be able to quickly ascertain is that, for example, HDFC Bank, let's say, has 10 offices and HDFC has 5 offices. Now, those 15 offices are there, so there can be cost rationalization or optimization. So instead of having 15 units or 15 offices, they can just probably work on 11 offices and the entire business can continue to run smoothly. So these type of steps can lead to cost saving. Similarly, there can be potential revenue growth also. For example, if HDFC Bank works in conjunction with HDFC Group and there is one decisive leadership authority which can channel these synergies between these two companies, then probably it can lead to more revenue generation. So these are some of the advantages, that one is a cost optimization that takes place and one is revenue increase. So that is the reason why mergers and acquisition take place. There are many more reasons. Again, refer to this particular chart, but these are the two primary advantages. Now we don't need to do a PhD on it, but we need to ask ourselves a question that HDFC is going to merge with HDFC Bank and the markets are reacting in a really funny manner here. For example, that during the day, HDFC Group increased by 15%. For such a large cap company to give a gain of 15% in one day, it is crazy. It has not happened just because of mergers and acquisition. There are more factors at play and more sensible factors at play. So let me explain that very, very quickly as to why this HDFC investment was a sure shot guaranteed return, so to say. So here you need to go back and understand one of the key concepts that I had taught you a few days back, which was around India's growth story. So in India, the growth rate is roughly 15%. Now, how do we get to that 15%? Very easy. That roughly our real growth is approximately 8%. That India typically grows by 8%. Inflation is roughly 6 to 7%. So if you aggregate both these things, the growth in India is 15%. That is how we reach that 15% number. Now, what does this 15% indicate? It indicates that good companies in the economy will at least grow by 15% every single year. Now, you tell me which is the best bank in India. That is HDFC Bank. Now you tell me which is the best housing finance company in India, which is HDFC Group. So the growth in India is roughly 15%. Now there cannot be a scenario where the growth is happening at 15%, but the biggest bank in India, the biggest lender in India is not growing at least at 15%. So that is the reason why something like HDFC Bank and HDFC Group will have to grow at 15% for India to support that 15% growth story. So that is the simple thought process that you could have adopted. Now you might ask me that, Akshat, can you explain this 15% growth rate for HDFC Group and HDFC Bank? Can you explain that very quickly? So if you take a look at last 5 years, the CAGR has been roughly 16%. If you take a look at last 3 years, HDFC Bank has only grown at 9%. In last 1 year, it has grown by 1%. So essentially what this data is telling you is that if you would have purchased HDFC Bank in the last 1 year or in the last 3 years, today you would have made profits, because today there was a breakout day for HDFC and HDFC Group companies. It was not as if that, hey, some merger news, therefore, the stock became rocket. No, it was undervalued at that point in time. And therefore, I was not giving you simple gyan. I actually went ahead and poured a lot of my own money into these companies. So I hope this helps you understand that these stocks do not become rocket because some news has come of mergers and acquisition. Yes, that's a support system. There is little bit of support due to that. But to be honest, these stocks were undervalued. There was no problem there. HDFC Bank is the best bank in India. HDFC is the best housing finance company in India. The numbers are sensible. And if India has to grow, these companies have to grow with it. There is absolutely no other reason why that 15% growth will happen in a country like India without companies like HDFC and HDFC Bank growing with it. So I hope this real reason is clear, because this real reason is something that people will not tell you. They will keep on giving you news only that, hey, it happened because of news. No, news is not the reason why these things happen. If that were the case, then only journalists would be trading in the stock market, no one else. So I hope this picture is clear. Let's move on to the next point. Now comes the question that what is it that you should be doing in HDFC Bank? Should you be taking fresh positions? My answer would be no. Please do not take fresh positions. The most likely outcome is that this entire scenario will cool down a little bit. That is point one. If you are already a holder in these banks, should you be selling your stocks? Well, it depends on you. I'm not going to put a recommendation there. I'm not going to sell it because my perspective is very clear that, hey, just buy good companies, hold it. There is no point in excess trading, especially on good stocks. If there is no fundamental problem with the stock, please don't sell it. Yes, in the short term, it can go down. It can even fall down by 10-15%. Do I care? The answer is no. My perspective on this is very, very clear that I'm investing in India's growth story. And in order for India to grow, something like HDFC Group and HDFC Bank needs to grow with it. And there is absolutely zero problem with the HDFC Group and HDFC banks. So I am an investor in them. In fact, going forward, I might take even more positions in HDFC Group and HDFC Bank. And almost all my family members, after watching my videos, they have also purchased HDFC shares. Now comes one related question here that, hey, if I am holding HDFC shares and they will be converted into HDFC Bank shares, then is there something that I need to do? Right now, don't do anything. Don't worry about it. Certain announcements will be made by the company and you will understand how to convert your existing shares from HDFC to HDFC Bank. Right now, you don't need to get worried. Your shares will not get invalidated. Nothing bad is going to happen. Let's move on to fourth and very important point here, that what are some of the key lessons that I learned from this entire journey of investing and reaping benefits from this HDFC Group story. So point number one is that no one can predict stock prices. I'm telling you very, very honestly, literally no one in the world, even the biggest investors, they cannot predict the stock prices. So please stop with the game of predicting stock prices. You can't do it. People keep on talking about stock prices all day long. It is a futile exercise. All you can simply predict is that you can do a business analysis and predict the growth of a company. Invest in good businesses. The reason why I am active in the stock market is very simple, because my entire career is designed around it. I invest in stocks, I invest in companies, I do business analysis. So my 90% of the day just goes into analyzing businesses. So that is my mode. And hey, by the way, there's a new course that I have launched, which is around conducting business analysis. So if you're interested in learning about how to do the analysis. That is what the course will focus on. So you can check the links in the description box. It will be taught by me directly and my friend Luis Fonseca, who is ex-McKinsey Portugal office, and it is geared towards management consulting. So we will package everything that we have learned at BCG, Dalberg, McKinsey, and by studying at top business schools like NCERT. So do check it out. You will learn a lot through that course. Now coming back to the second key takeaway. When I made that HDFC video saying that, hey, I've invested a lot of my money, a lot of you took positions. In the short term, there was a lot of pain associated with HDFC group companies. Stocks fell by 10-15%. Even HDFC AMC, you can see from my portfolio, it is in red. What I'm trying to tell you through this point is that in the short term, there can be a lot of pain in good companies also. But that does not mean that you should lose faith in these companies. Because when good companies start running and when they start giving returns, they can give 15-20% return in a single day also. HDFC Group story today is a case in point. So please do not get scared by 15-20% notional loss on good companies. Again, I'm getting a lot of heat that, hey Akshat, you talked about like HUL. Okay, first and foremost, none of this is a stock recommendation. Please do it at your own behest. The word of the day today is behest. And also be responsible for your own money. It is okay, listen to everyone's viewpoint, whoever viewpoint you like, whoever you think is an honest person, just go and try to learn from them. And then finally, it is your responsibility to manage your own money. But you need to understand a very simple point. In this day and age, it is very, very rare to find profitable monopoly/dominant companies in the market. There are literally a handful of such companies. HDFC Bank, is it a dominant bank or not in India? It is. Is it a profit-making bank? The answer is yes. Has it consistently made profit? The answer is yes. Can I tell you the same story about FMCG companies like HUL in India right now? The answer is yes. Again, I will get a lot of heat that, hey Akshat, you're talking about HUL. I'm buying more of HUL. It is fine. I see that as an opportunity. Why? Because if you do not have the courage to buy stocks when they are falling, how will you be making money? Now people are jumping onto HDFC Bank today when it has given like 10-15% return. And now how much money are you going to make from it? That's a simple problem, that people start chasing a running bus. When the bus is stopping and it is holding, no one is even trying to get into it. When the bus starts running at 60 kilometers per hour, that is when people get excited and they try to onboard the bus. And it is very dangerous. And I think there was a dialogue also somewhere in some movie that don't run after a running bus, train and something else. So all of you can tell me what that something else is. So the bottom line I'm trying to tell you is that you need to be responsible for your own money, figure out what good businesses are. And if you see profit-making dominant market players in the economy, it is very, very rare. These are actual true unicorns. And if you do not have the courage to buy them when these stocks are falling, you will not make money. Stock market might not be the place for you from that particular perspective. So this brings us to the final segment, that what is the next good stock that I'm bullish about? The answer is Hindustan Unilever. I will say it out loud. It's not a stock buying recommendation, but many of you have messaged me today on LinkedIn that, hey Akshat, thanks for sticking your neck out for a company like HDFC Bank. But tell us what according to you might be a next big opportunity in a good stock. So that according to me is Hindustan Unilever. I have already done a lot of analysis of that stock. You can go check it out. If you feel comfortable, take some positions. If you don't feel comfortable, please do not take positions. Again, I'm not responsible for the profits that you are making or the loss that you are making. You need to do your own independent analysis and reach a conclusion. Only then you will become a better stock investor. I hope you enjoyed the video. Let me know in the comment box if you have any questions or concerns, and I will see you tomorrow.